Hello, everyone, and welcome into Senior Living Live. My name is Melissa. As always, we appreciate you taking the time to join us for this webinar today, all about long-term care. Our presenter, Ben Green, will help us all walk away with a better understanding of what the coverage offers, how much it costs, and how you and your loved ones can start the process of locking in this coverage today. Ben will be available to answer all of your questions at the end of the webinar. That's why we love these so much. To ask a question, all you have to do is scroll down to the bottom of your screen where it says Q&A. Type your questions out there, and I am happy to read those to Ben. Of course, all audio and video lines will be muted throughout the presentation. Ben, thank you so much for being with us today to share your knowledge all about this particular topic, long-term care. The webinar is all yours.
Thank you, Melissa. Thank you very much for having me. I'm really excited to be here today about an interesting and important topic, and couldn't be happier to share a little bit of information with y'all and look forward to the questions that arise. So first of all, I'll tell you a little bit about myself and my company that I work with, Insurance Advantage. We got started back in 2010 and really started serving folks in sort of affordable health insurance plans. We migrated to the space of Medicare because we found that a lot of folks were a little bit undereducated and underserved in terms of Medicare information. And from there, a lot of our clients have asked us to look into their retirement and their kind of pre-retirement planning. And that's where we started focusing on Social Security and, of course, long-term care insurance. I have a BA from Morehouse College, have an MBA from the University of South Carolina. My colleague, David Harrell, he works with me, of course, as well. And he has a BS and a master's in human resources from the University of South Carolina. And we started in South Carolina, of course, but we now serve North Carolina, Georgia, Tennessee, Connecticut, Delaware, and really can serve anyone from across the country because we're all about education and making sure folks have really good understanding of insurance and what they're going to need for as they're working and also as they retire. As I said, we put a great emphasis on education. And so I'm actually regional director for the Financial Education Partnership, which is the largest, one of the largest nonprofits for financial literacy in the country. And we really like to educate folks in all aspects of their financial lives. So whether it's Social Security, whether it is health insurance, whether it's Medicare, whether it's long-term care insurance, we're there to answer questions and help make sure folks understand what's happening. So, Melissa, as we talked about a lot, long-term care insurance. Of course, when we first started talking about it about a year ago, it was an important topic, but now it is an extremely important topic, extremely hot topic. And so, before I talk about what it is, I'm going to tell you why it's so hot now. So we have two things going on. Of course, COVID has impacted a lot of folks, and it's also impacted a lot of insurance companies. And so you do have a lot of insurance companies now that are taking a new look at their underwriting for life insurance and for long-term care insurance. And so that's why if we have anyone on the line today, on the webinar today, considering getting long-term care insurance or at least taking a look at it, it's important to ideally do it now because of a lot of the underwriting changes and a lot of the underwriting analysis that like these insurance companies are undergoing. The second thing that's going on is long-term care insurance is becoming more of a hot topic, both on the state level and on the federal level. Okay, so a lot of you all may not know that in Washington state, you now have to provide proof of long-term care insurance. And if you do not, you actually are taxed about 1% on your salary, essentially, to put away some money for long-term care insurance in the event that you go into a facility, a state facility in Washington state. Okay, a lot of states are looking at this legislation that was passed, and this all just went into effect, I believe, actually effective November the 1st. And so you had a lot of people in Washington state that were not protected for long-term care insurance. They rushed out to get policies. And this is something that at least 10 other states are considering right now. So this is not just something we're making up in terms of a need. This is something that the states have realized is a big deal. Second thing you have is on the federal level, both on the Democratic side and on the Republican side, you have a lot of folks now, senators, representatives that are understanding that long-term care insurance and the cost of it for the federal government is a big deal. And so the Bipartisan Policy Center, which was formed by Tom Daschle and Republican Bill Frist, of course, who is a doctor, they have just come out with a recommendation, and they have suggested to Congress that Congress incentivize employers to offer long-term care insurance and even potentially auto-enroll employees that are over the age of 45. Now, I'm 46. Thank you very much. If you think I look like I'm a little bit younger than that, but I appreciate it. But at age 46, what these folks are saying potentially is I would be auto-enrolled in long-term care insurance potentially if they kind of have their way and can have their proposals go through Congress. And so this is not something that's currently legislation, but it is at the forefront of a lot of folks' thought processes now. So that's why this is a really important topic today, and glad to go over more of them. All right, so what is long-term care insurance? So long-term care insurance is insurance that helps to cover the cost of skilled nursing, home health care, or nursing home care, and it's not covered by health insurance, okay? Typically not going to be covered by health insurance, and it's not going to be covered by Medicare, okay? So Medicare in particular, if you have, depending on the plans you have, you may have from days 21 to 53 or days 21 to 60. If you're in a skilled nursing facility, you may have to actually, for the first 20 days, Medicare plan may actually cover those first 20 days at a $0 sort of copay, okay? But after days 21 to about 60 or so, you may have to pay $180 or so per day for that care. And then after that, from day 60 to 90 in a skilled nursing facility, Medicare plan, depending on the kind you have, may actually pay a portion of that. After day 90, you're on your own essentially with Medicare. And even before that, of course, for about 30 or 35 days there, you may have to pay about $5,000 in a skilled nursing facility. So long-term care insurance is going to cover the cost of skilled nursing, home health care, or a nursing home. And long-term care insurance, very importantly, it's not to be confused with long-term disability. Long-term disability is what a lot of us have as we're in our working years, and we want to protect our paychecks, basically. Long-term disability covers protecting your paycheck. Long-term care insurance really covers protecting your assets, okay? And making sure that you're going to be covered if you have to go into a facility or if you have home health care, and also making sure that you basically are not forced into poverty because of the cost of long-term care. All right, what does long-term care insurance not cover? So it does not cover your health care or your medical costs. So of course, Medicare Part A and B, and maybe a Medicare supplement plan can cover that stuff. Prescription drug costs are not covered by long-term care insurance. And so a prescription drug plan, for example, can cover that. Hospitalization costs can be covered partly through Medicare A and B, and then also through a Medicare plan. And once again, just to emphasize this, because a lot of folks do not know this, long-term care insurance is not covered by Medicare. All right. So what are the qualifications for you for a long-term care insurance policy kind of kick into effect, or for you to sort of enact a long-term care insurance policy? It's really the six activities of daily living that would sort of impact that. And so if you cannot perform typically 2 of the 6 activities of daily living, then your long-term care insurance is going to kick in. And so they are eating, bathing, dressing, toileting, transferring, which is kind of walking or having some mobility issues, or getting from your bed, out of your bed, incontinence. And then the other activity, if you will, that can cause a lot of issues is cognitive things like Alzheimer's or dementia. Those are kind of the qualifications for the insurance kicking into effect. So why should you get long-term care insurance, and why should you even care about long-term care at all? I wanted to share some statistics with you. So there's typically about a 70% chance that someone will need long-term care coverage. Women typically have a little bit higher average than men. There's normally about a 3-year average in terms of your length of stay. Okay, sometimes it's shorter, sometimes it can be longer. Okay, on average, we're looking at about $7,000 per month cost there, and it all kind of depends on what your longevity is. And the reason that it's really important for long-term care insurance is if you have some assets that you're counting on in retirement, those assets can be eaten up really quickly, as you'll see with the cost of long-term care insurance. And what are the stats for folks that are age 65? Age 65, you can pull this right from longtermcare.gov website for the government, the official website for the government. So if you happen to turn age 65, long-term care, your chances of going into long-term care are going to be 70%. Okay. For women, the average stay is going to be about 3.7 years if you get to that age. For men, it's going to be about 2.2 years. And 20% of 65-year-olds will stay in a facility or will need home health care for longer than 5 years. So 20% of you all, 20% of us will need long-term care for longer than 5 years. And Genworth is a great resource when it comes to the cost of home health care, skilled nursing facility care, and long-term care. And so they came up with some costs. These are costs from 2004, and then you can see the 2020 costs as well there. And so it is increasing a little bit, but bottom line is that for a home health care type situation, depending on what state you're in, can be about $4,000 to $4,500 per month, basically. An assisted living facility can be about that same amount, so about $4,500 per month. And then if you need to go into a nursing home and you want to get a private room, which a lot of folks do, you're typically looking at around $8,000 or $9,000 per month on average, as far as the national average. Okay, so if you just take $8,000 per month, and you're in a nursing home, and say you're male and you're going to be in that nursing home for just 2 years, not even 5 years. Okay, you're looking at 8,000 times 12, so that's 96,000 times another 2. So you're looking at about $200,000 there in costs. And as we said, some folks can stay in nursing homes and home health care situations for more than 5 years. I know people that have been in situations for 10 years. Okay, so that's why long-term care insurance is also about protecting your assets. So when it comes to the cost, we already saw the cost there. Okay, so the natural question is how can you pay for it? And that's a great question. So typically there are three buckets you can pull from for long-term care. The first one, of course, is going to be your savings and your retirement, your 401ks, et cetera. And then hopefully, some pension you have either from your company or from the railroad or whatever it's going to be. So that's the first typical bucket that you can pull from, of course. The second bucket is going to be Social Security. So if you have worked for 10 years and you've been paying Social Security taxes, et cetera, then you're going to qualify for some sort of Social Security benefit, of course. And if you have not taken a look yet at what your estimated benefit is going to be, I highly recommend that you do that. You can do that by going to this website, ssa.gov /benefits/retirement estimator. And you can plug in your figures, and then you can also, to get a really accurate number, just go to the same website, ssa.gov, Social Security website, and log in to your particular account, and they'll verify your account. And then you can see exactly where you are in terms of your estimate. So I highly recommend that so that you can know, how much you're going to be getting in that second bucket of money, if you will. And then the third typical bucket that we recommend is to have some sort of long-term care insurance. Okay, so those are typically the three buckets. Once again, Medicare, if you're counting on that, that's not a bucket that you're going to be able to pull from. Typically, you're not going to be able to pull from that because Medicare does not cover long-term care. And I literally had folks say, when I win the lottery, and you may be lucky, and that's a great, it's a great sort of funny joke, but basically, we like to plan for things that are 70% going to happen, and not kind of leave that stuff to chance. With long-term care coverage, one option that does get mentioned sometimes is Medicaid, and that is an option. With Medicaid, for you to qualify, it really kind of depends on what state you're in. So Washington State versus South Carolina versus Florida versus Georgia, Tennessee versus Illinois, all going to have different levels of Medicaid. But typically speaking, you have to be in poverty to qualify for Medicaid. The cap is typically around $15,000 or $16,000 in total assets that you have, not counting your house. So, less than 15 or 16,000 in stocks, bonds, extra real estate, all of that stuff that you have to qualify for Medicaid. So this poverty level, your income has to be typically less than about $1,300 per month total for you to qualify for Medicaid, and a Medicaid option for long-term care coverage. And then you also can be subject to a waiting period if you need to go into a Medicaid sponsored nursing home. So as an example, in Florida, there's up to a 5-year waiting period to get into a nursing home. Okay. If you're counting on Medicaid to really take care of your long-term care costs. And so we do not recommend that as a strategy. And then the other thing regarding Medicaid is your property will may very well be subject to what's called the MERP, or Medicaid Estate Recovery Program, MERP, which was part of the Omnibus Budget Reconciliation Act of 1993, Congress. And it is an attempt. It's basically the state reimbursing itself for your long-term care funds that were spent through Medicaid by taking your house or other property. Okay, so for all of those reasons, we really recommend that people plan it out so that they're not counting on Medicaid to cover these costs. So what are some other options? So long-term care insurance is another option, of course, to pay for long-term care coverage besides your retirement, your pension, Social Security. This is typically the third option, and third kind of part of the table, if you will, or the chair, that we like to recommend. And so you have 3 different types for long-term care insurance typically. So you have a standalone type of plan where you can put down a lump sum, and that's going to be for an individual, put down a lump sum for coverage, for example, like $50,000 or $75,000, for example, and that bucket of money will grow over time. And so it may start out, that bucket, for example, may start out covering you for $3,000 or $4,000 per month, and as it grows over time, it may grow to $6,000 or $7,000 per month of coverage for a 5-year period to pay for the cost of long-term care. You also have standalone long-term care options for individuals where you can pay a monthly amount. So, for example, you might pay $200 or $300 per month to have a set amount of long-term care, and as it progresses, that bucket of money grows for you. Okay. That's one option that is popular. And another option that is becoming even more popular now is a hybrid model where you have life insurance and long-term care sort of wrapped into one product, and that's available through kind of individual life insurance options where you can add in a long-term care insurance rider to it, and also there are some group options that are available for you if you depending on the size of company or nonprofit or government organization you're working with. There are some options that are available there that I'll go over as well. Then the third option gets a little bit more creative is if you do have some retirement funds sitting on the side, IRAs, or maybe like a stock, account, a Fidelity account, or whatever, that has a set amount of money in it, you can put that into an annuity, a life insurance annuity, that can grow over time and will kind of leverage those funds to provide 2 or 3 times the coverage for long-term care. That's an option that we've looked at for several of our clients, especially if they have some health issues. Okay, that's an option for a lot of them. So those are a couple of options for long-term care insurance. Really important question for all that stuff. And anyone that you're going to talk to about long-term care insurance is it a reimbursement policy or is it an indemnity policy? So reimbursement means that you are going to have to essentially kind of pay up front, and then you send in receipts to the long-term care insurance company, and they reimburse you, okay, for those expenses. Or they actually may pay directly to the facility for your long-term care coverage. All right. An indemnity policy means that if you're supposed to get $3,000 per month from the long-term care insurance company, once you've triggered those 2 activities of daily living, they're going to send you, the policyholder, directly the money. Okay. If it's $5,000, whatever it is, whatever that policy is, they're going to give you that money, and then you can decide what's going to be done with it. So you can, of course, pay the facility, but you can also utilize that money for home health services. You can, there are lots of different things you can do with that money. You can even utilize it for, paying utilities and so forth at home, for, as part of your home health care coverage. So we typically, 99% of the time, we recommend an indemnity type policy. We like the freedom, the flexibility that provides. And so that's something that you always need to take a look at when you're signing up for a long-term care insurance policy. If it's through a life insurance model, then normally speaking, it's going to be an indemnity type of policy. Okay. But always look out for that. And then as to kind of wrap up here, want to give you just my own personal example. So I am dealing with long-term care needs right now for a very close family member, and it's expensive, folks. It's basically utilizes all of his first two parts of his bucket. So it's using up right now his pension, and it's using up all of his Social Security for him to be in an assisted living facility. And it is really important for families to understand how much it costs. For us, it's about $4,500 a month, all in, to cover everything and cover all the expenses right now. And it's really important for families to understand like the real cost of this and the real cost of not planning for it. Okay. And then for me personally, as I said, I'm 46 years old. I already have long-term care coverage. I already have it because I've seen a lot of folks, even younger than me, who have pre-existing conditions who are never going to be able to get long-term care. They can get it after maybe a 10-year waiting period if they kind of clear some hurdles for long-term care coverage. Okay. And even for life insurance, actually, because of their conditions. So I have a life insurance policy that has a long-term care rider in it, and that's kind of an individual policy for me. And then I also have a hybrid policy that I was talking about that's life insurance plus long-term care kind of combined. And it's through I got it through my company, essentially through our company. And both of my policies are indemnity type policies where we have flexibility for not only the type of facilities we want to pick, et cetera, but also if I want to have home health care, or if I want to utilize some of that money for other means, I can do that with the policies that I have. That's my own personal thing, and I'd be happy to share those in a private conversation. Be happy to share those the policies and companies and all that stuff with you. All right. So how can you get long-term care insurance if you want to get it? So for an individual, you're typically looking at filling out an application, of course, and then you need to have to do what's called a paramedical exam, where a nurse can typically come to your home, and they're very COVID conscious, or you can go to a particular facility and get, of course, your urine, blood analysis done. They take your blood pressure, kind of check your heart, et cetera. And then typically the company will also follow up with an interview where they're going to just kind of verify the need, which that's very easy to do, but they also verify your cognitive abilities and kind of see where you are cognitively. Okay. So the individual process can be the most strenuous, if you will. So we encourage folks, especially if you're healthy, to look at it earlier rather than later, please. If you're working for a company or nonprofit governmental organization, if you have over 5 employees, there are actually at least 2 programs that are available to companies that will help give you some simplified options where you answer a couple of questions and you can get long-term care coverage. And then if you're with a company or a government organization, nonprofit that's over 100 people, there are a couple of companies that will give you an actual guaranteed option where there are no questions asked to get long-term care insurance, and that's really nice, especially because of some of the more stringent underwriting requirements that some of the companies give individuals now. And then if you're 65 years old or 70 years old, there's actually still hope for you. There are actually still some really good options available depending on your health. We help folks all the time, 66, 67 years old. They want to put something in place. We help folks all the time. In fact, I was helping my mom get some additional coverage yesterday. Actually, she's in her mid 70s, and so it's never too late. Typically speaking, if you're 80 years old, that's we're going to have to get really creative. But folks 70 and under, in particular, we can help you out with no problems. So this is an ancient proverb. The best time to plant a tree was 20 years ago. The second best time is now, especially because of COVID, especially because of the unknowns as far as health, et cetera. We really recommend that folks take some action, not just think about it, but actually take some action on it, or at least make sure you have a plan in place. Whatever your plan is, that's fine, but make sure you do have a plan in place and you have some plans in place for your family. And I just want to thank you for your time today. We really, value your opinion and your trust and your time, which is the most important thing y'all have. We all have. If you do not contact us on it, please contact someone. Please do some research and take some action because, as I said, it can be very impactful and really important. And here's my personal email address, of course. You can call my personal cell or text me. Always happy to provide free consultation. That's free all the time. And then if you want to set up an appointment, you can contact me directly or call my office. And we're really passionate about education on this and making sure that families are prepared. And with that, take any questions.
Ben, great job. We've already got quite a few questions, so let's go ahead and get to them. Our first one does come from Anonymous. I've been told I'm not eligible for long-term care insurance because I am receiving Social Security disability. Is this correct? I'm 72.
Typically speaking, if you have Social Security disability, that means you have some sort of pre-existing condition, you have some health conditions, et cetera. And so on the individual market, yes, a lot of insurance companies are not going to give you coverage. Yes. And so in that scenario, for example, it would be helpful. Well, if you're getting Social Security disability, that may mean that you're also not working, of course. And so, yes, that can be problematic. So if you have Social Security disability, then we may need to help you do some Medicaid planning around the assets that you have to see if you can qualify for Medicaid.
Next question. Patsy asks, does owning your home disqualify you for Medicaid?
So no, it does not. No, it does not. But if you have other assets, yes, you can be disqualified for Medicaid.
Okay, easy enough. Anita wants to know, at the time you need it, if someone has no other assets, but they do have a long-term care policy, would you be prohibited from getting Medicaid if you qualified?
Very likely, yes.
And you mentioned very likely. Are there times when that wouldn't be the case?
So if it's just a standalone long-term care insurance policy, so the entire reason that the state is providing Medicaid is if you don't have other resources. So that might be looked at, depending on your state, as a resource that you have to cover long-term care coverage. And so we'd have to see exactly how much long-term care insurance that's going to cover.
Jim wants to know, I'm 73, so I'm afraid that long-term care would cost me way more than I would get out of it. Now, there may be a lot of people just like Jim that are out there. Ben, what would you say to them?
I would say, Jim, not so fast. Not so fast, Jim. It depends on how much you have in terms of assets. It depends on how long you have, how long of a runway you think you may have. For example, if your folks, my granddad lived to age 99. And so at age 73 for me, it would absolutely make sense for me to still get long-term care, because I'm going to have maybe 5, 10, 15 years for that money to grow, maybe 20 years for that money to grow before I need, in a policy, before I needed it for long-term care. So Jim, you're 73 years old. My mom's 74. I just was helping her get some additional coverage yesterday. Actually, we took care of the long-term care insurance for her about 10 years ago, but we were getting additional life insurance for her yesterday, Jim. So not so fast. You absolutely should consider at least doing a real analysis. The other thing I'll add for Jim is if he has a certain, so for example, if you have $1 million in assets and it's all in the stock market or bonds, et cetera, you can actually carve off a piece of that, for example, 10% of that, $100,000, to put over into a long-term care insurance annuity that will grow and that will actually allow you to leverage that money 2 or 3 times depending on your health. And so it's very important to understand now that we have policies that are available that are not just kind of use it or lose it policies. We now have policies available where you can put your money in, and if you do not ever use a long-term care insurance, your beneficiaries get the money back when you pass away. Okay, so it's probably 10 or 15 years ago, the policies were only use it or lose it. So you either went into long-term care facility or you did not. And if you did not, you basically lost your money. Now we have policies available where you're either going to use the coverage or your family's going to get the money back as beneficiaries. Does that make sense?
Absolutely. Yes, it does. And if anybody has any questions on that, and feel free to chime in for Ben. We did have a question from someone here, and that was, what is the cost? And so I'm wondering, when you mentioned that in particular, where the money stays and remains with the family no matter what, is the cost more or less?
So it all depends. So a lot of it depends on how much coverage you want. So do you want a policy that's going to give you $4,000 per month or $6,000 per month? And then it also depends some on your health. So, we have to get creative. We have folks that have AFib or that have, I was working with a couple where the husband was very healthy, but the wife had diabetes and she had some heart conditions, heart issues. And so we actually had to put her in one of the kind of the long-term care annuity type solution. So it really all depends on your particular situation, but you can put together policies where you put down a lump sum of $50,000, for example, or you can do $200 or $300 per month for 15 years as an example, and kind of pay the cost of the coverage.
Yeah. So Russ, I saw your question. I hope that answers your question. That costs are really probably going to be determined on what you want and how you want it.
Yeah.
So yeah, great job. Thank you, Ben. Amy asks, if I have an in-law that lives in Florida and did not plan, what are his options?
So Amy, I would ask, what are his, how much does he have as far as assets right now? So, does he have additional assets in the first 2 buckets? What does he have as far as his pension, his retirement, his savings? And then, what's he have coming in as far as Social Security? Because some of our clients actually use some of their Social Security to actually, pay for coverage. They may peel off $300 or $400 per month to pay for some long-term care coverage. So it really kind of depends on what he has. If he has nothing in terms of assets, then he needs to be looking at Medicaid planning.
Great. And then there was a follow-up to that question. Are family members responsible for outstanding balances to Medicaid when a family member dies in Florida?
To my knowledge, no. It kind of goes with the individual. Basically, it depends on the state, but typically it goes that responsibility goes with the individual, but here's where the family loses. So if your father, mother, whomever are utilizing Medicaid in Florida, South Carolina, wherever they are for long-term care coverage, you may lose the house after they pass away based on how much they spent in that facility. Does that make sense?
Yeah, it makes sense to me. And again, if you have a follow-up to that particular question, feel free to put it in either the chat box or in the Q&A. And Amy actually says, thank you. So great job. Good, Ben. Now here's a question here that I think is a phenomenal question, and it comes from Charles. The long-term care industry has been financially stressed for many years. How can an individual assess the financial viability of a company and prospective premium increases? Great question.
That's an excellent question, Charles. So need to dig into the contracts, which is what we do for the particular companies that we work with. There are only long-term care insurance companies, and then there are now a lot more life insurance companies that provide some long-term care coverage or provide hybrid type of policies or even hybrid types of annuities. And so you need to dig into the contracts, and that's what we do. And then you also need to just evaluate. You can take a look at the rankings. So, the AM Best rankings, the Standard & Poor's and Fitch ratings, financial ratings for this individual companies to make sure that they are strong companies that are going to be around for a long time. And on that note, so over the last, I think, 10 years, we've had about 6,000 banks go out of business in the United States. Okay. One of the reasons is that banks are only required to keep maybe 2 or 3% in reserve of all the kind of the liabilities essentially that they have on the books. Life insurance companies and these long-term care insurance companies, they typically have to keep 100%. And a lot of them have 110 or 110% of their liabilities in actual assets. So for example, if they owe 100, or if they have $100 in liabilities that they're kind of counting on, they may have $114 in the bank essentially to cover those assets. So as far as A-rated life insurance companies, none of them have gone out of business basically ever. Okay. And that's who we deal with.
Yeah, that's excellent to know for sure. You want to make sure that when you put all that money into it, that it's going to be there for you when you need it.
Yes.
So great question there, Charles. And he also has a follow-up that is equally as good. Are any companies converting the use it or lose it policies to the form where if you do not use it, your heirs get something back?
To my knowledge, there is no conversion going on right now. So if you had a use it or lose it policy, that's what you're going to have. And so that's why now we work with, and granted, we just started working with this stuff about 6 or 7 years ago. We just work with companies where it's either, it's not a use it or lose it scenario, because we don't like those scenarios.
Christopher wants to know if my in-laws are working with a financial advisor, can Ben work with that advisor?
Yes, we can. Yes, we can.
Okay. And how often do you get those requests, and how does that work in that scenario? Is it just a side-by-side situation, or does one person have to have more than 50% of kind of control, or how does that work?
So we actually have a lot of financial advisors that bring us in to help with Medicare and also to help with long-term care insurance, because they don't do that. And we don't do stocks and bonds. Okay. I'm not going to be, trading your stocks out and your bonds out, for you in your portfolio. We don't do that. We stay in our lane and want to be like world-class experts in long-term care insurance, Social Security, advising Medicare. And so we actually have a lot of advisors that bring us in and they ask us to fill this particular role. On the other end, sometimes clients will request to the advisor that they bring us in, and we come in and we just kind of talk with the advisor and let them know that we have something specifically we want to help take care of for the client. And it's very important. I did not explain this in the beginning. We're independent insurance brokers. We've been in business for the last 12 years. We scour the earth to find the best insurance products there are known to man for each particular item that we help with. So whether it's Medicare, whether it's long-term care insurance, life insurance, we literally had talked to hundreds of companies to find the best and also the strongest financially. And so we're fiercely independent, and that means that we are an advisor in the same type of role as a financial advisor or even your lawyer, actually. And everything is kept private, and that's their commitment now and going forward for the next 30 years.
Yeah. So you're working for our viewers. Essentially, you're not working for
Yes.
an insurance company, and
Yes.
that makes a lot of difference. So
Yes.
thank you for that distinction. Excellent. Kathleen asks, I have a health savings account. Can I take that money and use it for a hybrid insurance long-term care policy?
That is a wonderful question, Kathleen. That's a wonderful question. To my knowledge, no, you cannot. So you can use those for Medicare. You can't use them usually for Medicare premiums, but you can use those for for co-pays to go see doctors and things along those lines. But you cannot use it to pay for other insurance. That's a great question, though. Wish we could.
Yeah. Another one from Anonymous. Where can we learn more about Medicaid planning? I have a 95-year-old with very limited assets whose Social Security is above the Medicaid cutoff.
So it would depend on the state. So I would Google, if they're in Texas, Google, Texas Medicaid qualifications, and it will come up and show you what the cutoff is, or Texas income qualifications for Medicaid, or maybe Texas, Medicaid asset qualifications. Any of those sort of Googling activities will show you, what's required, what the cutoffs are. But it can be tough if folks have not planned to kind of get it done quickly. And certainly at age 95, yes, absolutely, they need to focus on this stuff as soon as possible.
Yeah, and the follow-up to that one was the state is North Carolina. If that helps.
Yeah. So literally between South Carolina and North Carolina, completely different qualifications. Georgia to South Carolina, completely different, and Tennessee to Georgia, it's completely different. So it's very important to be able to talk with brokers who can kind of make those distinct, and advisors that can make those kind of distinguishing recommendations.
Okay, and it looks like we may have the final question here. Jim wants to know, I am a veteran and I understand that the VA will pick up a part of the cost. Is this correct?
So Jim, so it's very important to note what coverage you have. So there is VA coverage, and then there's TRICARE. Okay, and if you qualify for TRICARE, our understanding is that the government can pick up a portion of that cost. It will be for kind of VA qualified, kind of VA nursing homes. Okay, if you just qualify for VA coverage, that you may or may not be covered, so you have to kind of you need to verify with the VA what your coverage is going to be, and then also where you may be required to go in terms of nursing homes, et cetera. And so we actually work with several veterans that have decided to get private long-term care insurance.
Okay, very good. Excellent. A lot of questions. I knew there would be today for this particular topic. Ben, before we leave, is there a way you could pull up the final screenshot you had of your name, your email, your telephone number, in a way that people here can get in contact with you? And what is the best way to contact you, Ben?
They can email me. They can call me directly on my cell phone on the screen there, or they can set up an appointment through my office.
Okay.
Yeah, or they can even text, actually.
Oh.
Get a lot of text, and that starts the conversations. And once again, we're happy to help folks nationwide.
Yeah, perfect. We love it. Excellent job today, Ben. And to answer the one question again from Christopher, will we receive a copy of this presentation? Yes. If you RSVP to be here today, you will get a link tomorrow afternoonish that will be available for you to share with your friends, family, whomever, with all of what you saw today in this presentation with Ben. And it looks like we've got another question that scrolled in. Great discussion from Christopher. So yes, I agree, Christopher. It is one of those things that everybody should be thinking about. It doesn't matter what age, that literally everybody should be thinking about. And Ben, you are the go-to guy, at least for us. You know the ins and outs and how to work through all the minutia of this information. And we thank you so much for sharing your wealth of knowledge with us today.
Well, Melissa, thank you. I want to thank Arbor. It's actually, as you can see, it's a labor of love. I really enjoy talking about this stuff and making sure folks are taken care of.
Yeah, and we got another thank you from Kathleen. So Ben, great job. And to our viewers, if you like this webinar with Ben, I encourage you to check out the rest of his videos about Social Security benefits, understanding Medicare, and ways to prepare for retirement. You can find all of that available at www.seniorlivinglive.com. And of course, his information is right here. You can reach out to him if you have any additional questions or just need a little bit of help when it comes to preparing for retirement. Everybody here, thank you so much for joining us. Ben, thank you for taking the time to be with us today. And as always, we appreciate you all watching Senior Living Live. Have a great day, everybody.